Hi, I'm David Kamite, and welcome to Voices That Impact. Thank you for joining us. Today we have a very, very special guest, a longtime friend of mine, James Sanders, all the way from Philadelphia. He trekked up to New York to join us. I'm so deeply appreciative of your time. Mr. Sanders, who I call the senator as well, has a long track in the banking industry, particularly to our audience that whether you're a CM, whether you're a small business, whether you're a growing company, we know access to capital is a very, very important thing to businesses of all sizes, and it hits you at different levels. But particularly the community that we serve, small and growing businesses across the country, there's a lot that's happening today. There's a lot that's happening relative to policies. There's a lot that's happening on the legislative front. And all of those things ultimately will impact you. It impacts me, the businesses that we run. So we're so grateful for James to have trekked up all the way from Philadelphia and to share his perspective on a number of fronts. But before I turn over to James, I want to also share with you that midway through this, we're going to have Liz Duncan come up, our Chief Impact Officer, who's been with us for quite some time, to continue the interview. So you'll have the dynamics of both myself and even a better person, Liz Duncan, to sit with you. So again, thank you. If you wouldn't mind just sharing your background with our audience.
Sure. Dave, thank you for the invitation to come and visit, have a conversation about impact. I'll share a little background on myself. So James Sanders, born and raised in Philadelphia. As you can see by the size, I look like a football player. I'm not at all. I play chess. However, some years ago, I did play football. I work out, stay healthy. And so I went to a small school in Virginia. I left Philadelphia, went to Virginia State University, and I decided to major in economics. Why is that important? Well, growing up in the 80s and 90s in Philadelphia was challenging, and my family dynamics and so many other things. And so the things that I saw growing up economically, they weren't exciting to me. And I want to use some fancy terms that we use nowadays. I've experienced as a young person things like food insecurities, home insecurities, and many other things. Mm-hmm. And so I decided to figure out how to change that, not only for myself, but for my family and my community. And so I found this major called economics. And through that journey, graduated with a degree in economics. I've worked in finance for the most part in economic development. Worked for some major companies, pretty large, multi-trillion-dollar international asset management firms. Did an executive MBA at a pretty large school in Philadelphia, Temple University. But all of that was for me to capture this education and information to compete in the marketplace, to take care of my family, but also to figure out why the heck were people poor? Because I grew up poor. How can I eradicate poverty? And as Sean Carter said, i.e. Jay-Z, I just wanted to take care of the world I knew.
Great.
Right?
Yeah.
And I thought it was financial planning, financial advisory early in my career. So I tried that. I was okay at it, but I realized there was something more. And I learned that owning a business, operating a business, or investing in a business was an alternative way to wealth creation. I don't want to say a faster way because that gives a perception that it was easy. It's not easy. And so over the years, I've invested in business, owned a business, invested in real estate, but I had to learn those things. I currently serve as Senior Vice President for Community Development at a regional community bank that works in Pennsylvania, New Jersey, Delaware, and Maryland. We do some stuff in New York and some stuff in DC, some stuff meaning work with businesses in those markets. And I've been in this industry for about 26 years. I also chair a board in Philadelphia, which is the African American Chamber of Commerce, New Jersey, Delaware. We are an advocacy organization, a membership organization for minority-owned businesses, specifically focused on African American-owned businesses. All right, we advocate for their growth. We advocate to be a multiplier for Black and Brown-owned businesses in the Greater Philadelphia Metropolitan Service Area and beyond, through policy, through access to capital, contract opportunities, and beyond. So that stuff I do for free. And then I work in the most capitalistic industry in America, banking. It's extraordinary, but it also allows me a seat at the table to see how things operate. I am not a complainer. I try to figure out where the problems are and to solve the problem. So I have a seat at the table to help solve the problems of access to capital, lack of wealth, and so many other things. So that's a little bit about me.
Yeah, and we're so grateful to have someone like you with your background, your experience, and with a particular focus on small business.
Yeah.
So when we look back at the things that we do around credit and trying to help others that look like us, right? One of the things I think about is the sustainability of growing businesses, right? And access to capital impacts businesses in so many different ways, right? Whether you've got a high school degree, a college degree, a master's degree, I've seen all kinds of hurdles and issues that preclude very smart, driven people from getting to the next level. And when we look back at COVID, which I still think has a long-term impact on businesses, that even if you survive, right, you were limping, and even with some government assistance, right, a lot of people came out struggling because they didn't have the right infrastructure to either survive, or those that did survive, right, weren't able to then get the capital that was available because of the number of issues that accordingly that they had on their own. Help the audience to understand what happened in the last 7 years, the COVID trend, those that survive, limped through a lot, are doing a lot better now. But when I think about economics in terms of long-term sustainability, right, it goes back a long way. It goes back to a period, which is why a banker or anything with credit always asks you, what have you done in the past, right? So share with the audience in terms of what you saw during this era, because let's face it, that was a big era, right? It was a big issue.
It was life-changing. In 2021 or 2020, probably started in 2019, there was some major economic downturns and some problems. Prior to that, might have been about 12 years of bull market growth.
Right.
When times are good, you feel good, you spend money, you buy things. This is America, built on consumption. You think about our GDP, our $1 trillion GDP, 70% of our GDP is based on consumer goods, consumption by consumers, 70% of that. So people like you and me and everybody else is buying things, right? So in those, sort of 8 years or 12 years of growth, we bought big companies. They bought, they spent, they build things, they put contracts out. So small contractors, when I say small, I'm thinking SBA standard size. So if it's a GC, standard SBA GC general contractor, it's roughly like $33.5 million in revenue over a 3-year time period average. That's a small business for the SBA for general construction, right? If it's like a cleaning company, I think it's somewhere around 1,000 employees. If it's manufacturing, it's 100 employees. You could be doing 50 million, but if you got under 100 employees, you're small, right? So it's based on the nature codes. I say all that to say, business could have been booming for them during that time. All is well. And then 2019, something is weird going on, but we don't know. Then 2020 happens and the economy is shut down. That has not happened in 100 years. None of our lifetimes, 100 years. I think it was like the measles epidemic in the 1920 or something like that since it happened.
Yeah.
Has never happened.
Right.
I'm sorry. Or it hasn't happened in 100. So it was new.
Yeah.
And not only did America shut down, the world.
Right. Global
shut
crisis,
down.
right?
Global crisis. It felt like the world was going to end. I'll pause there. I'm going to use an analogy. Animals in the wild, they have these instinctive behaviors that's built into their DNA because they distinctively know that there's seasons, right? If it's a squirrel, they go gather all their acorns, put them inside the tree, and they're there, right? And they get really big, right, during the wintertime because they understand seasonality.
Right.
They know there's going to be a winter time. They know there's going to be a summer, so they understand seasonality. It's innate. But we as humans know that the seasons are coming. But for some odd reason, when things are good, we feel and think they're always going to be good.
Right.
So we don't store for rough times. When I say we, generically speaking.
Yes, yes.
I'm not saying everyone.
Yes, yes.
I'm saying the mean. If
Right.
you think about a bell curve, everybody in the middle.
Right.
Not the outliers. So
Right.
if you're an outlier, good job. But we're talking about the people in the middle. And the challenge is when the pandemic hit, there was a struggle there because you didn't have a whole bunch of cash reserve, probably didn't understand the financial systems very well. You may not have had a great relationship with your bank, investment company, or financial institution. And so to get the information you needed to apply for at the time, the PPP loans or the payment protection plan loans or the EIDL loans, you didn't know. I'll give you an example. I had a private equity company that I was working with that owned 35 hotels. Of the 35, I had 22 in my portfolio. They had all of their PPP applications loaded for each one of their hotels because under the Small Business Administration, a hotel with less than 500 employees is a small business. Going back to the definition.
And each one was an LLC.
And each one was an LLC.
Interesting.
I had 22 PPP applications locked and loaded and ready. The CFO office had it all knocked out, cleared up, talked to the CEO and everybody else. They had their financials in the package. All the small businesses, they had no clue.
Right.
And even though the large private equity company, I was talking to their CFO, they had the document. They filled out the draft. As a bank, we couldn't accept the draft. They wanted to force it down my throat. I said, we can't accept that. So we had to wait till the federal government produced the real document, the submittable document. But the small businesses, they had no clue. And I'll get to this point. When the portal opened up, the businesses who had the relationships, who communicated with, not just because they had more money, they understood the system, they were able to submit right to the portal and the money went fast. That's why they had to go for round 2.
I think the underlying theme is education in terms of how the process works and preparedness. Is that somewhat?
So I'll add to that. Before you get to the education, before you get to the preparation, it is critically important to build a relationship with your financial institution.
Yes.
You are correct in the education.
Yes.
Most people in the middle of the bell curve don't understand that the U.S. banking system has 3 tiers. It has a community bank tier, 10 billion and below. It has a regional bank tier, 10 billion to like 200 billion, right? And then there's a money center bank or large. So there's 3 tiers. But most people don't know that. And they all act differently.
Right.
Most people think a bank is a bank. Whoa, you don't have a branch on every corner? You're not a good bank. That's not true.
Yeah. You know, it's interesting that you say that, and I'll speak for ourselves that, like everyone else, every other business, we were trying to figure out the system and the process. And you're right, though. I went to my banker, we went to our CPA, and we went to our payroll provider, believe it or not.
Right one to go to.
Because they understood certain elements of the application I couldn't figure out.
Correct.
And our payroll provider, who we've been with since 2005, I mean, we have a great relationship with them. They literally helped us to understand the documents on the payroll side, because there was a plethora of documents. I'm like, oh my God.
Right.
Now I had them, but it's like, how do they apply? And it was interesting. And I think particularly in what we do in helping small businesses with bonding or insurance, the document preparation is of itself sometimes a hurdle. I need this and that, and they're struggling to get it and so forth. So I think that's one of the underlying themes I'm hearing with you. That's not part of the system itself.
No.
It's just people not have the opportunity to be better prepared when there is a downturn or at any one point in time, right?
Yeah.
And so those that sort of missed the deadline, those that that didn't get what they should have gotten or whatever, we heard all kind of complaints. That era then went on to, what's the word, sort of undercapitalized. You didn't come out the way, you had an opportunity to come out better had you been better prepared to receive a larger amount. Does that resonate with you? Because I heard that to a lot of small businesses, hey, I think I could have got more, I didn't get enough, or I missed the deadline, or so forth.
Easy answer is yes.
Yes, right.
I'll give you a deeper answer.
Okay.
The deeper answer is as follows. First, there's some things that we're not saying. What's not being said? black and brown folks have historically been discriminated against. Redlining was a thing, still is a thing, right? There's been discrimination, still a thing, was a thing,
Is a thing.
is a thing, right? There have been a lot of hurdles, and then those dynamics are passed down in families. The conversations around the dinner table, or the uncle or the aunt or the cousin or the dad is having a conversation, or the mother or the aunt or the grandmother is having a conversation with the kids about how they were treated. Women couldn't get a mortgage before 1974, 1975.
Right. Not that
It was
long
a
ago.
thing.
Not that long ago.
Women couldn't get credit without a man signing for it.
Right.
Wasn't that long ago.
Right.
52 years.
Right.
Not that long ago. Women. We're just saying women. Forget the ethnicity.
Right.
Women.
Right. Right.
That's a big deal.
That's a massive deal.
Right? And so now that information is passed down from generation to generation. 52 years is not a long time. That's like one generation.
Yes.
So do you trust to go to your bank if they were treating you like that? Probably not. But things have changed. There are a lot more banks now than there were then. Yes, there have been some consolidations and some contractions in financial service industry, but obviously there's more opportunity there. And so you have those behaviors and belief systems that have been passed down in families that within themselves create barriers to getting or obtaining the education. So that's part one. And because that exists, when you're building your business, everything is held close to the vest, down to how you file your taxes, how much you pay on your taxes, because sometimes business owners, I've heard, well, I don't want to pay that much in taxes. Well, okay, keep doing that. And then you come to the bank and say, I want to borrow $1 million. Well, your taxes says you're not profitable. How are you going to borrow that money? Well, my person who advised me said I should do this so I won't have to pay in taxes. Okay, good.
Right.
Now you want to borrow some money, you don't show a profit.
Right.
You are in business. If you ever look at your IRS document when you are filing taxes, or if you download your EIN number, it says that you are a for-profit business. If you have a good accountant, they're going to tell you after a certain number of years you need to show a profit.
Yeah. Yeah, we see that as well on our side, where we handle bonding for small businesses, and we see that quite a bit. Misinformation by the CPA to do things that doesn't benefit you. Let's put it that way.
Right. And it's encouraged, and the challenge is the business owner, they don't know, but because they're the entrepreneur and they're paying for a service, you're going to get what you paid for and what you asked for, not what you need.
Right. Not what you need.
Right. And I'm going to tie all of this in. If you follow a system of profitability and building owner's equity and building your balance sheet, and like the animals in the wild, understanding the cyclical nature of your business and the macro big economy, storing some away for wintertime or a rainy day, when a pandemic happens, you might be okay on the other side.
Right.
You may not go out of business. I ran a small business. When the pandemic happened, I didn't even take out my wife said, hey, do we need it? No, we don't need the money.
Right.
Why?
Right.
We didn't borrow if we didn't need it.
Right.
And we self-financed up front, and we made sure we reinvested for the first 5 years of the 10 years of the business. So when bad times came around, it did not hinge us.
Right.
Because we put a practice in place. We didn't go buying big cars, nice houses. We didn't do all that extra stuff. Continue to reinvest because we put some principles in place to guide our behavior in good times. And times were really good.
Right.
We were able to do some really nice things. But when bad times came, you also know. Now, the other part is I work in banking. I also know that when you apply for those dollars, those are federal dollars. And when you get those monies, or if it comes from a bank, they now have permission to ask you for your financial records. It's part of the covenants. It's part of the required documents.
Right.
When you sign that loan agreement, it says annually we can review your financials. And if you are not doing things properly, when they review your financials and you decide to borrow $100,000, $1 million, $2 million, they can call the loan and say, you missed this, this, and this, you're in technical default. We are calling your loan. Now you're upset because you don't have the education based on either your belief systems or your behaviors.
Right.
And so going back to the education, and again, I'm tying it into beliefs and behaviors.
Absolutely.
Because of issues in the past or 12 years of a great economy.
Right.
And then winter hits. And it gets challenging. And yes, it affected minority-owned businesses more than others. Women-owned businesses more than others. Veteran-owned businesses more than others. Many of them went out of business. Absolutely affected them. What could have prevented that? Now, it's hard to say. It's really, really hard to say. But I think putting principles, not the right, but putting principles in place to guide how you act and behave when you're operating your business, and to build a strong balance sheet is critically important.
If we move to today, what's interesting is we see significant layoffs in the tech area, right, because of AI, and other areas as well. We see the market booming despite, and I'll use the word despite, and you have a lot of economists, and like you, I'm very finance economic driven.
Yep.
And it's just like you read or you listen to these various authors, and it just doesn't align anymore. The market sort of is behaving on its own accord. Layoffs are at a high level, but yet the unemployment rate is here. We, across the sector that we see and looking at small businesses, we haven't, I mean, the slice that we're seeing, and I'm not suggesting it's the entire, a good portion of the U.S. economy, but if you take a sample in the Northeast regional marketplace, we haven't seen significant strides, right, in this area of access to capital. And obviously that is stunting growth. And, from your vantage point, do you think it's some of the same issues that were 5, 6, 7 years ago, lessons not learned? Or do you think it's a different dynamic now because the market has changed and all that? Things are moving faster. It's almost hard to read these days because 2023 seems so long ago.
It does.
Than today.
It does.
It's like it's a different world, right? So share your perspective on that. I mean, that's not long ago, 3 years, right?
Yeah, I mean, look, the pandemic was officially, we herd immunity, something like 2021.
Right.
That meant we can go outside.
Right.
It's like, all right, enough of y'all got it. We can go outside now. Still didn't change much, right? We were able to go outside. Companies jumped up because of some very, very public incidents, George Floyd, so many others, to say we want to jump in and commit, and those dollars went wherever they went. What that did not change is the systemic impact of access to capital. It was a reaction. And systemic changes that need to still occur are policy changes from the state level, whatever state you live in, the federal level, and if you're living in a big city or municipality, those levels. So those 3 levels. When you talk about the federal level, House Committee on Small Business, Entrepreneurship, House Committee on Finance, U.S. Treasury around CDFI, financing for capitalization and mobilization. I think there needs to be some policy updates there from Congress and Senate. When you talk about the interim rule for CRA, they were making some changes there. It has since been paused.
Right.
But
Which is affecting a lot.
It is. Because they were going to
a massive domino effect.
Right. They were going to increase that number, and it would have, I think, positively impacted small businesses because it would have increased the number, and banks would have had to act different.
It would have, but it's paused.
It's paused, so nothing is happening.
Nothing's happening.
Meaning, status quo.
Right.
Same thing.
Right.
And then the SBA, there's the 8A program. I think that's gone or being diminished. There was MBDA, the Minority Business Development Agency. They had business centers across the country.
Not being funded,
right? They had capital centers where they were providing access to capital to business owners.
And education.
some called technical assistants. There are SBDCs under the SBA, Small Business Development Centers. There are PTACs, Procurement Technical Assistance Centers, all this stuff. Again, these are resources and tools, but they're not remedies.
Right.
Policies.
Right.
So it's like I'm going to go to football. You're a soccer guy. Football, so I'm going to go to football. You can have great players, but if I have a whole bunch of big linemen, big quarterback, big running backs, but I want to run a West Coast offense, spread it out wide. I might score, but they're not as fast as the more slender, nimble team. So you have a playbook, but the players that don't match the playbook.
Right.
Our playbook in capitalism is policy, legislation. It shows the procuring agencies under federal. DOD is one of the largest procurers of contracts in America. DHS, Department of Homeland Security, HHS, right? So many others. And then when you come to local levels, then you got private sector where they have the $1 billion roundtable. Some of those large agencies that commit to procuring $1 billion to one company. We have companies like Worldwide Technologies that, think they're somewhere like 11, 12 billion. He was in Forbes. He was there a long time ago, right? You have Act One and so many others working with private sector. But that came from legislation that happened in 1969 that created MBDA. And then private sector followed up in 1971. Policy and legislation led the way for private sector to behave different.
Right.
That has not progressed. At this point, it's regressing, if you will.
Right.
And it needs to be addressed.
Right.
In an impactful way. But even when it's addressed and amended, changed, or new legislation is put in place, then the people and their belief systems and the way they act in business also need to change.
Right.
So
there's responsibilities on both sides.
There is responsibility on both sides.
On both sides.
You can't just say, all right, the laws have changed, now it's going to be better. No.
Right. You have to educate yourself about the law.
Yes.
And you have to learn how to conduct yourself within the current times.
Correct.
And I think there's an opportunity for all of us to always remind ourselves that the one thing that doesn't stay the same, and I know we've heard it, is everything will change.
Absolutely.
Everything always changes. And those that want to live back in 2022, well, no. What's the new policy? How's the new policy affect me today? And I think when people talk about access to capital, which is a very, very large conversation, first at your individual level, then at the business level, and at the policy level, they often, to your point, I think, forget about what's the current policy.
That's right.
Because lending is different than it was 2023.
1,000%.
With that, we're going to take a minute break and do a changing of the guards. I'm so happy to have had my opportunity to sit with you. And by the way, since you love chess, and we're going to have a game one day because
I'm looking forward to it.
That's my second favorite sport as well. Yeah,
good stuff.
Yeah, I play with my kids now quite a bit, so it's great. It's great fun.
It is.
But as I wanted to thank you personally, we're going to have Liz Duncan come in and finish the second half of the show. And again, I'm grateful for at least to have my share of time with you, right? And we'll take a minute break.
Hi, welcome back to Voices That Impact. I'm Liz Duncan. I'm Chief Impact Officer for MBDI, and I'm delighted to be here with James Sanders to continue interviewing you.
Hey, Liz.
Yeah, hey. So thank you so much for joining us. I want to talk a little bit about the trust and authenticity issue that you experience on both sides of the coin. So on the one hand, when you were working with the big banks, you're walking this fine line between advocating and being viewed by the C-suite as a disruptor who's not a team player. How did you juggle that? How do you manage that friction?
Back then or now? Which one?
How about both? Because then you were probably learning, and now you've established your methods. So teach us.
Yeah, back then I was learning.
Yeah.
And trying to figure it out. Could not be a disruptor in my mind because I had a family to take care of, a wife, 2 kids.
Yep.
but I also wanted to learn, and I had a passion for delivering to my community. So initially, I was a financial advisor in some of the toughest, I was going to some of the toughest neighborhoods, knocking on doors,
Amazing.
talking about financial planning, and that was hard because some of the families that I visited could care less
Yeah.
because it wasn't a big priority, right? And I showed up fresh out of college, 2 or 3 years, and in a suit in neighborhoods that I grew up in, but it didn't really matter.
Yeah.
I still didn't look like I was from the neighborhood, so I was a standout. That was one way I tried to impact. And then when I was in the banking world, some of the clients that I attempted to do business with, they just weren't ready. And so when I say weren't ready, either they didn't have the credit, they did not have the financial systems in place, or they did not have the balance sheet with assets for collateral and things of that nature. And then if they had some other character-based issues, and in banking, this is governed by
the
the
3
five,
C's.
yeah,
The 5
right,
C's.
the 5 C's. And if you got some character issues like a blemish, like you went to jail and you got some felonies, they look
That's
at that.
gonna be tough,
That's,
yeah.
that's gonna be tough, right? Where I'm from, if you ask someone, you can't ask them if you're going to jail, but they,
But you kind of need to know.
yeah, the application said, do you have a felony? And if they lie, that's even a character issue. If you tell me the truth, and then because of some of the laws, I can't decline you because you said you went to prison. The law says I have to take your application.
Right.
If it's under $1 million, I got to take your application.
Right. So that brings us back to the question of redlining, right?
Yeah.
So now they call it digital redlining because there's not really a banker with a red pen saying we're not loaning to this neighborhood because it's all black people who live there.
Yeah.
But the criteria is still based on legacy wealth,
It is.
right? It's based on FICO and
Yeah.
credit scores.
Yeah.
And how do you get around that? What sort of metrics could be used to help folks in those communities qualify when they don't have necessarily the credit score?
I had a whole different answer, but you went down a different road. So
Oh, sorry.
No, you're good. You're good. I'll come back to my response though.
Okay.
How can people qualify? So some of the basic things that I don't know if the audience knows, I'm going to say this.
Yep.
Work with a credit counseling agency to work on your credit, right? Usually they're nonprofits and they are fair and they're going to take their time to help you understand credit and to get your credit score up to a good score. 700, 720, 680 or above is a good score. You're at that 720, 780, you're at great. And then you go to 760 or 80 and above, you're at excellent. But also your credit history matters and things of that nature. So we're not going to go into that now, but the credit counseling agencies help you with that. If you go with some of those private credit people that help you, that say that they're gurus, you have to do a background check to make sure they are who they say they are because they can get you in trouble.
Right. We've had folks in our programs who said, oh, I'm working with this person. They're spending just their fee like $1,000 a month,
Yeah.
plus the money they're using to pay off their debt. So that's a key point.
Yeah, and just digging themselves
You don't
into
know
a
what
hole.
you don't know. You get
don't.
somebody who comes and they talk smooth and they're somehow reaching you and you
Yeah.
take their advice.
And if you look on their social media and they have the blue check, you trust them. Social proof.
Yeah, social proof.
If they have 1 million followers, social
They must be
proof.
good. Yeah, social
If they're on YouTube or live or LinkedIn live and they have all these likes and people commenting, social proof.
social proof. Yeah.
Validated, they're good. Not so much. I do this all day.
Yeah.
And I can listen like fraud, but I don't go online and say anything.
Right.
Because somebody's like, oh, you're a hater, who are you?
Yeah.
Then you
yeah,
attack
then
me
you
for
look like
nothing.
you're a troll when you're
Yeah.
actually just trying to.
So I
people
say,
out. Yeah.
no thing.
Yeah.
But what I say is how business owners can get through that. So I'll go one, if you're starting a business, if you're emerging and then you're growing. If you're starting, make sure you check your credit, go online and also do a LexisNexis check. Check your LexisNexis because your LexisNexis has all these things on it, like your driving record, like your auto insurance record, your homeowner's insurance record, like if you filed things, if you had some tickets that had points, all that stuff is on your LexisNexis. And at a bank, we not only pull your credit report, we also look at your LexisNexis
Okay.
because your character is on there. So all the things, when they say, don't do that when you're younger,
Yeah.
because it might
Because
be
it's
on
going to
your
come back
record.
and bite you.
That's your record.
Yeah. Yeah.
It's there.
And LexisNexis is where
It's
that
on
shows
the
up.
LexisNexis. And some, there's some other reporting agencies and with the LexisNexis. But in any case, you need to know that as a business owner. As a business owner and individual. Even when you go buy a car,
Right.
you need to know that when they look at your FICO score to buy a house, it's a different score than to buy a car, than to get a term loan for furniture or something to that effect. And when you go into a bank and you want merchant services, you're like, hold it. So to accept payments, you need to check my credit? Yep. To get a remote deposit capture? So all those things, you need to make sure you got good credit. And if you don't, you'll work on it. And the other piece is build a relationship with the bank and build a relationship with a banker. It is critically important that you do those kinds of things. I don't think I answered the question totally, Liz. There was some more.
Oh, back to the
digital redlining.
Digital redlining.
Yeah. So trying to say this out loud from a different perspective, but because I work in the financial industry, you can give people the tools, but they don't really want to do all that work.
Yeah.
They want to be good at their business, whether it's a hair salon, an auto shop, bakery. They just want to be good at their business. They don't want to go on to census.gov or FFIC and see if they're in the census tract, because it feels like it doesn't matter.
Right. Absolutely.
Just give me the loan.
Yeah.
I have good credit, so on and so forth, so on and so forth. Throughout this interview session, I've been saying one phrase often, and I want to get back to why I'm saying it, because it ties into what you're asking. Balance sheet. Okay. On the balance sheet, you have your assets and your liabilities. And a financial institution, whether a bonding company or a bank or a non-depository financial institution or a mortgage company, or whatever, they want to see what your balance sheet says. What are your assets? The challenge with diverse businesses is they have low assets.
Yep.
And that's the biggest hurdle to grow, which is the biggest hurdle to access the capital.
Right, which again is legacy.
Yes.
You know, if you couldn't buy a home because you couldn't qualify for the GI Bill a long time ago because you're a minority, you're redlined.
Right.
Yep, you can't get the GI Bill, so you're going to be in housing. You're going to be in an apartment, so you're not going to have the equity in your home to take a loan to go send your kids to college, to start a business. All that stuff interferes.
Yeah.
So on the surety side, I know we've seen folks who have a bad credit score, but it's because they had a medical issue, they got outstanding medical bills, or they've got a story behind it. And sometimes we can get the sureties to say, okay, you've got a story behind this, but we see all these other metrics where you are showing good character. You're paying all your utility bills, you got a great rental history, things like that. How often do you see things like that coming into play when a banker is looking at an application?
Not often.
Not often, yeah. Even on the CDFIs or the subsidized loans?
Different.
Okay. Now we're not talking banks.
I wanted to be very clear and direct, not often. On the CDFI side, Community Development Financial Institutions or Certified Development Entities, CDEs, they are able to look at your rental payment history, your utility payment history, your cell phone payment history, right? Your auto insurance payment. They are able to look at a lot of different things to build a credit profile for you, different than banks.
Right.
You might be able to find a bank to do that. I haven't. But you might. I'm not saying it doesn't exist, but it's rare. Because of all the historical issues of discrimination, redlining, undervaluing properties within the red line.
Yep.
You can't take out the equity from your house to send your kid to college, or take out a business line of credit and use your home as collateral to start and grow your business.
Right.
Because
fits
maybe
in
you don't have a home.
Right.
Well, let's just say you had all that. You had a life-changing event, a divorce,
Right.
or another life-changing event. Somebody died, and the house went up in foreclosure. I knew a few people like that, and there was a reverse mortgage on the home, and they couldn't get it out.
Right.
And there was an issue. So life-changing events cause your balance sheet to tumble. They do. It could be various kinds of things. And so what individuals don't pay attention to often is their balance sheet. Am I consistently building assets? And you can go to school, get all the degrees you want, and continue to become a high earner. Wage earners pay more taxes than business owners. And until you learn that as a person, you can become a lawyer, a doctor, a PhD, a DO, an MD. I learned this because when I started out, my wife and I, we weren't making $100,000 together 30 years ago. And then we started making more money, and they started taking more taxes.
Yep.
And our kids started growing, and then we were phased out of those taxes that we could qualify for. And then even because we were paying our mortgage. And the mortgage, that was even phased out.
No interest deduction when you
No interest deduction. And after a certain point, I went to my CPA and I said, hey, why am I being phased out of all this? He said, listen, you and your wife, you're doing a great job. You're growing your career, making more money over time. We started paying the IRS. Yeah. And tax, I haven't had one of those in a long time. And so what he said was, wage earners pay more than business earners. If you owned a business, even though you own 2 pieces of real estate, it's not like it's a second home and it's in another city. You live in the suburbs and your other home's like 5 miles away. It's not big, so you don't get that much to write off. And so at that point, that was 2015, I decided to start a business.
There you go.
And to build my balance sheet. And to buy more real estate. And to create operating income. Business, we started, the tax rate's like 15%. But we get the money before we pay the taxes. And we can distribute it however we want.
And you can float it, just like the banks.
Right. So that's the difference. But when you are an individual and you're making all this wealth, it is very challenging to allocate that wealth in the right places. And Liz, I'll say this last thing. Forbes magazine coined a phrase in an article some years ago. The phrase was around asset managers and wealth managers. They would call these individuals Henrys. Okay. And a Henry is a high earner not ready yet. A high earner not ready yet is somebody that's earning between $200,000 to $500,000 in annual income, but they do not have enough assets to invest because things change, like their zip code, the type of car they drive, so their lifestyle changes with their income.
Right.
So they think, oh, I'm making $200,000, $300,000, $500,000 a year, but their tax bracket also changes as well. And so because they're making more, they're high earners, but they're not ready yet to invest. And those Henrys, the high earners not ready yet, they're also not ready yet to access capital for their business because they may not have the balance sheet. Right. They don't do the biggest thing on their balance sheet may be 2 things: their 401k and their primary residence. And we're talking middle America. I didn't say anything about low to moderate income or impoverished people. We're talking, that's the middle America when all these policy and legislators, and they're talking about middle America, that's what they're talking.
Yeah.
They drive the economy. They have enough money to buy things, consume. They have some discretionary income. All right. And lastly, I'll stop there because you got more questions for me. I was going to touch on some business segments.
No, go for it. Touch on the business segment.
When Dave had some questions around the topic of small businesses and how they were impacting the economy and how the economy has affected them. So what I want to go back to, I like to usually educate the audience. So the U.S. economy, when you think about the business sectors, I think it's somewhere around 31%. It's made up of large enterprises. 33% middle market companies. The middle market at stages. And then 34% small businesses. And so a large number of employers are middle market and small businesses. Right? Now, they have big employers like the Walmarts and Sam's Clubs and Targets and some of those companies, those large, and Comcast. Some of these large companies, they hire people. They hire a lot of people. But they're a small percentage of the business ecosystem. Right. The backbone of the business ecosystem are small businesses and middle market companies. And 90% of them are privately owned. And right now we're in what we call, in the financial industry, called the silver tsunami, where there are baby boomers that are, call it 65 and older, that are going to be retiring between now and the next 20 years. And there's $84 trillion of wealth between high net worth individuals, only high net worth. And of that, something like $5 billion in business assets will be changing hands, potentially.
Or closing down if their family doesn't want it.
Or closing down.
Yeah.
So there's an opportunity, but there's also a gap to access the capital to buy these businesses, to acquire these businesses, and things of that nature. And so I wanted to make sure I, again, talked about those different levels of business in the economy. And so while we're speaking a lot about small businesses, we're speaking about small businesses of scale. right? We're speaking about...
Yeah, small businesses aren't necessarily small.
No.
You go up to 100 employees. That
They
can
do.
be a pretty substantial business,
Yes.
especially in the world of AI,
Yes.
where there's fewer people doing the same work.
Yes, right, and especially in the world of AI, where they have AI agents, right, generative AI, agentic AI, and so many others where they're growing companies with 2 or 3 people, you know, and there have been a couple of unicorns in that space already. And so, while we do have a lot of work to do, I am hopeful, which is why I am doing the work that I do. You asked me initially, how do I navigate?
Yes.
So I navigate that landscape by being a good employee, by doing my job well, but also by going above and beyond and being a subject matter expert about what's happening in the market and in the footprint that our organization serves, but also being a leader on boards. So I serve
Excellent.
as a board chair for the African American Chamber of Commerce, PA, New Jersey, Delaware. I serve on a board of directors for the Redevelopment Authority of Montgomery County in Pennsylvania. I serve on a board for the Enterprise Center, which is a CDFI. It's a pretty large CDFI. So those are 3 that focus on small business, diverse businesses, as well as economic development. We deploy millions of dollars. And then there's another one, the Philadelphia Accelerator Fund, that I serve on the board of on behalf of the bank, Univest Bank.
Okay.
And then all those organizations focus on one thing that I always talk about. And the reason I am here today, deploying capital. Whether it's debt, equity, mezzanine, micro dollars, it's all about deploying capital to various businesses and around. It could be around affordable housing, it could be around small business, community economic development, which is revitalizing blighted communities, and affordable housing from the residential low to moderate income consumer perspective.
Okay.
Right? We do some of that in the organizations that we support as well. So going back full circle, why I do the work that I do, I've become a subject matter expert because I am a leader on these boards outside of the organization where I'm employed.
Right.
So
And you're learning from all the people on the boards and the different missions of the organization.
Absolutely.
So you're expanding your subject matter expertise
And the
into
people
new
you
areas.
serve.
Yeah, and the people you serve.
Yeah.
So let's go back to the people you serve. Let's go back to the communities. Like you're a young college grad, you're showing up in your new suit in your old neighborhood, and a lot of people are just like,
they were kind. They let me in.
yeah, they let you in, but they're like, okay, how do you manage that friction, especially then as a young person getting going? How did you break through and because you obviously made really well. You made out really well. So how did you get from that kid who was kind of being allowed in and given a cup of coffee, but not given the business, to where you are now?
Looking for a way to be effective. Because I continue to look for a different way to be effective, I didn't settle on the one avenue that I was taking. So the avenue to discuss financial planning from a risk management perspective, whether I'm talking about long-term care insurance, disability insurance, life insurance. People say, oh, that's taboo. I'm not going to die.
Yeah, exactly. I'm not going to talk about that.
Okay. Or retirement planning or long-term care, having these conversations, but then starting with what's important to you. When I see kids running around, are they important to you? You want to leave something to them? I had a few people tell me no to my face. I was like,
okay.
okay. But where you build trust is learning what's important to them. And so I had to figure out what was important to me in doing this work, because I never tried to force anything down someone's throat across the table, didn't try to oversell them. I learned how to sell really well. But what I also learned is you could sell a product or a service, but eventually, if you're not following up, they will let the policy lapse, or they will not continue to invest because it's not a part of what they want to do. And so I looked at wealth creation from a variety of angles, from a financial planning perspective, from an investing perspective, from a business ownership perspective. And what I learned and what I got more excited about was the asset class of owning a business, or the asset class of investing in a business. And then I went back to my economics fundamentals and understood supply and demand, or guns and butter.
Guns and butter.
You know, just stuck to that. And sticking to that helped me to build trust with business owners, individuals, and also had to be patient. I had to play the long game. And because I had to play the long game, I had to learn and develop patience and get past any frustrations that I had because I thought people weren't getting it. Well, if they were 40, 50 at the time and I'm 20, and I'm sitting there trying to get them to believe something new, finance or banking or economics, but I started doing a lot of professional and personal development, Liz. Learning about neuroscience, learning about speech pathology, learning about body language, learning emotional intelligence, understanding belief systems, understanding how to communicate effectively with people and audiences, learning how to listen, and doing that through coaching, workshops, classes, practice, getting honest feedback from individuals. And sometimes it did not feel good, but
doing the work is work.
Oh,
it's hard.
Yes.
It hurts.
Absolutely.
But you got to keep going in there.
Yes. Again, for me, my vision board says, here's where I want to go. It's going to be challenging getting there, peaks and valleys and troughs and things of that nature. And so because of the peaks and valleys and troughs, my goal was to overcome those peaks and valleys and troughs. My goals were to build resilience. And that came from when I was an athlete. I learned that because there were players that were better athletes than I was, they started before me. But after I paid attention so often, what I learned was, as long as I keep going, as long as I keep growing, I can win. So that's my philosophy.
And that's good advice for a small business owner.
Yes.
Be patient.
Yeah.
Be resilient.
Correct.
Do a lot of research, get to know your market, get to know yourself, your aptitudes, where your weaknesses are, the SWOT analysis.
That's right.
On yourself and your business.
Yes. Being introspective is important, and it really will help you to weather the storm. The economy continues to go up, continues to go down. We have issues and challenges. Businesses don't always make money and profit. But when you are resilient, and as Angela Duckworth says, the author over at Penn, you have that grit factor, you will succeed. Don't have that, life's going to be grim.
Yeah.
I hope all that was helpful.
Extremely helpful. Thank you so much, James. This
Absolutely.
has been terrific. Really appreciate your time and your insights.
Thank you,
Appreciate
Liz.
it. Take care.
Yes, ma'am.